Okay, so we've just had the Bank of England monetary policy announcement and press conference, and as expected, they have kept rates steady at 5.25%, but that doesn't mean that there weren't interesting new developments and things that we need to know from the announcement and the press conference. So let's go through a bit of that now. Now, as I said, that 5.25% was expected, but the market is pricing in 2 rate cuts this year. We have a 45% chance of a rate cut in June, and I think the rate cut in August, or a cut by August, is pretty much fully priced in now. It's just below 100%. So the MPC said that a cut in the next meeting was, in their terms, neither ruled out nor a fait accompli, which basically means a given. And in fact, they could cut ahead of what the markets were expecting. Obviously not sooner, but more aggressively than what the market's expecting. They're sort of basing it all around data, which we'll discuss in a moment. But one of the interesting developments was that Dave Ramsden, who's the Deputy Governor for Markets and Banking, voted for a rate cut. So in the last meeting, it was 8 of the voting members wanting rates to hold and 1 wanting to cut. And now it's 7 that are wanting rates to hold and 2 voting to cut. So that's a step towards rate cuts. And Ramsden was actually asked about his rationale for this. And the person asking the question worded it in a really interesting way. They basically phrased it in a way that Ramsden's vote is saying that he believes rates being held, which is what the MPC voted to do, if they're going to be held, then that means that they're doing damage to the economy if he thinks they should be cutting. And they wanted him to explain what his thoughts were about it. And he said that he'll explain further in one of his coming speeches. He has some speeches lined up. So those will be important to keep an eye on for further information. And even if you don't want the further information, it's important to keep an eye on them if you're trading the pound or the FTSE or things like that, because they could be market moving events. And in fact, they were asked about whether they're worried that these speeches are becoming more and more of like market moving events and almost as much as the main announcement. And they said that there are differences in assessments for the 9 voting members, and they see it as a strength of the system that they have to communicate their views individually. Like when they have these press conferences, the MPC as a whole, they're announcing and explaining the MPC's view as a whole, but the 9 members have their own sort of views on things and their own opinions, and it's good that they have the separate speeches to communicate these. And so I guess it's kind of understandable then that those would be market moving events in a situation like now where you have 2 members who are going against the pack and voting to cut rates already. So keep an eye out for that one, and let's see if it gives us any new information there. But at the very least, I think it will be moving the market. Now, in terms of inflation, which is what all of this is really about, they've lowered their forecasts. They're now seeing it be at 2.6% a year from now, rather than 2.8%, which is what I think their forecast was in February, which means that they're more confident now that inflation is heading towards their target. But it is still far above their target. But Bailey, the head of the Bank of England, said that he was optimistic about it. But he did mention in the Q&A when he was asked questions about it that it's about sustainably reaching their target and then staying there rather than just reacting to whether or not it manages to reach it. So it's not just about whether inflation is going to get below 2% or around 2%, but whether it will sustainably get there in a way that it will stay there once it does get there. That's what they're basing their decisions around. They also pointed out that they added a line to their forward guidance this time, saying that they're carefully watching the developments of how inflation persistence will be receding. And that's an important thing. Obviously, it was changed in their wording, and it was something that Bailey brought up in the Q&A afterwards as well. And they said that they're going to be considering forthcoming data releases. They pointed out that they are evidence-based, if you want to fully believe that. I mean, obviously, they're basing their decisions around data, but there'll be other factors considered as well. And the thing to keep in mind before the next meeting is that there are 2 inflation readings. They also pointed out that services prices are still very high. I think they're at 6%. And jobs data is an uncertainty. They still have to use jobs data, but the numbers aren't as reliable as they would want them to be. And that's an ongoing issue with the ONS. So they were also asked about politics. We're in an election year, obviously, and as we'll discuss in a video that's coming up soon about the Federal Reserve, I think even if these central banks are meant to be independent, it's inevitable that politics is going to play a factor and the election is going to play a factor in the decisions they're making. But they stress that they don't discuss politics in their meetings and they are independent. Now, of course, they're not going to be discussing politics in their meetings, but you can't tell me that they're not considering politics when they're making these decisions and their assessments about the current situation, just in general, not in those meetings, maybe in discussions with each other outside of meetings or just in their general assessments. So even though, they were asked multiple times about this and they stuck to that same line that they don't discuss politics, they are independent, it was clear from how the reporters were asking the question that there were some doubts about that, whether politics does stay out of it. And I have to say, from my point of view, I would also be thinking that too. There's no chance that they're not also thinking about the election, the polls and things like that. But make of it what you will. So far, the reactions after the announcement was that we saw the pound weakening slightly, we saw the FTSE heading upwards, but it's not such, it wasn't with real conviction. A lot of that move has been faded so far. And I think really nothing that came from this meeting was outside of market expectations. So although there are some slight points that we can take on board to update our fundamental analysis of this situation, I don't think it's anything too dramatic. So thanks for watching. I'll see you in the next one. Take care.